All right, breaker blocks. What is a breaker block? So, quick revision. Do you guys remember what a inverse fair value gap is? So, an inverse fair value gap is basically a fair value gap that is inversed or disrespected, like this case right here. We have this fair value gap, supposed to propel price lower, but it was disrespected and inversed, right? So it's an inverse fair value gap. A breaker block, a breaker block is literally the same thing but from an order block. It is an inverse order block. What do I mean by this? If we look at this right here, we have an uptrend, retracement, and then as soon as we close above this candle's high, this down close candle's high, this is now an order block, right? Now an order block should propel price higher, which it kind of did at the beginning. We have this wick, which is higher. So it did propel price higher, but at one point it got inversed. Once it got inversed, now it's called a breaker block. So as soon as we closed below of it, now it's called a breaker block. And we can see how price came up to it once, twice, and respected it, and then continued its way lower. So again, a breaker block is the same as an order block, but inversed. Same as a fair value gap, but inversed. You have a fair value gap and an inverse fair value gap. This is an inverse order block. So at the beginning, price respected it with this respected it with this down close candle. It wicked higher, so it did propel price a little bit higher, but then price didn't proceed higher, and then came back, inversed it, respected it once, twice, 3 times, 4 times, 5 times, 6 times, and then came down, right? So this now, instead of being called an order block, at the beginning it was an order block up until this point. But once it broke lower, now this is called a breaker block. So at the beginning, up until here, this was an order block. But as soon as we closed with this candle, now it's a breaker block. So that's the entire thing. It's just an inverse order block, okay? The last kind, which is a mitigation block that I'm going to be teaching, a mitigation block, okay? What is a mitigation block? A mitigation block is, you know how we spoke that an order block should propel price higher? A mitigation block is a order block that fails to propel price higher and it reverses. That is the entire thing. So a mitigation block, we have a nice example here. And this was basically, my entry wasn't based off of it today. This is a trade that I took. It was based off something else called a breakaway gap. I'm going to talk about that, don't worry. And SMTs, don't worry, I'm going to talk about that. But for now, let's stick to order blocks and breaker blocks, mitigation blocks. So a mitigation block, as I said, is an order block that fails to propel price higher or fails to do its job, right? So we have an uptrend here. It comes down. It trades above this candle, right? So look, I said as soon as we trade above a candle's wick, it becomes an order block, right? Now this one has no wick, so above the candle. So here, we closed above it, correct? As soon as we closed above it, this becomes an order block denoted in this box. It's denoted in the box, right? I'm going to delete it. I'm going to put it again so you guys see. This is now an order block. As soon as price traded above it, right? Cool. At the beginning, price respected it, propelled it higher. It should propel it higher than the high, right? Than the swing high. So price kind of respected it. Good signs. It didn't make a new high. It failed. Price closed below it. Where? Right here. With this candle right here. No wicks. Not this, not this. with this candle, with a candle close below the low of it, the wick of it. So as soon as we closed below of it, now this is a mitigation block. And we can see how price respected it and then continued lower. Now, as I said, I didn't enter off of it. If you would have entered off of it, no problem, but your entry would have been a bit lower. You would have waited for it to be disrespected, then you would have had an entry like this. But I entered off something called a breakaway gap, which I will talk about later, don't worry. So again, a mitigation block is a order block that fails to do its job. It was supposed to propel prices higher to new highs. It failed to do so. So that's why it's called a mitigation block. As soon, not here, as soon as we close with this red line, okay? Now I have a question. Why wasn't this candle denoted as an order block? It's a down close candle, but why wasn't it denoted as an order block or a breaker block or whatever? The reason being is, hope you guys got it right, we did not trade above it. The highest up close candle here is this. Did we trade above this high? No. So this is just a down close candle. It's not an order block because we did. If we closed above it, then sure, this would be included with this, but we didn't. So the only one that's included is this. And then, by the way, we have another down close candle here. Did we trade above it? Yes, right here, this candle. So now this is supposed to be an order block that propels price higher. Did it do it? No, it failed. So now we have this as a mitigation, also this as a mitigation. We can see how price even tapped into it. Now, do we have another one? Yes, we do. Right here. We traded above it. So this is also mitigation. Now, did we trade back above it? We didn't. Do we have to? We don't have to. We have this one and this one. So we don't have to trade the highest one. That's when you have multiple of them. You have to consider all of them. You can't be too greedy and needy and want the highest one. No. As long as your risk parameters are okay with it, you have to go for the lowest one. You can't ask for the highest one, the most premium one. Price doesn't have to give it to you. You have to go with the most probable, which is actually not this one. It's the lowest one. So it's this if you were to enter off of it. Okay. So that's on order blocks. I know this is kind of probably the hardest one yet, but please go over this lecture once and twice. This will be, you'll have homework assigned with this. Make sure to do it. Don't sleep on it. This is a very, very important lesson. For me, I don't really use order blocks too much in entries. I use fair value gaps, and that's good for me, but you still have to know what an order block is. And if you feel free to use it, if you want to use it, if you like it, then then feel free to do so. So that was the lesson on order blocks. If you need to, again, watch this lecture again. If you have any questions, shoot them. And yeah, until next time, stay safe, guys, and happy trading.